This is Craig Howgard with your Financial Issues Ag Update for August 24th. Well, corn had a fairly quiet session with the December futures down a penny and a half for the day yesterday. Weekly export inspections came in at 28.5 million bushels, certainly nothing to write home about. The biggest opportunity right now appears to be in the eastern corn belt. We're seeing some very aggressive bids by ethanol plants that need enough corn to make it to harvest. Reports of basis levels as much as $2 over the futures have been reported. So if you're in that part of the country and still have some old crop corn to sell, I would urge you to take advantage of this opportunity. The crop progress report showed the corn crop condition rating dropping by 2% over last week, down to 60% good to excellent. The corn crop is now 85% in the dough stage, with 41% dented and 4% mature. Last week we saw soybeans drop by 70 3/4 cents on the heels of reports of reduced biofuel mandates, and the Pro Farmer Tour pegging the national soybean average yield at 51.2 bushels per acre. After getting less rain than projected over the weekend, we had a slow start to the week, with the November futures closing 2 cents higher yesterday. We had no sales announced yesterday, and the weekly export inspections report came in at 7.9 million bushels, which is less than the 13 million that we need to average to hit the USDA's annual export projection. The soybean crop rating dropped by 1%, down to 56% good to excellent. 97% of the soybean crop is now blooming, with 88% setting pods and 3% dropping leaves. Wheat appears to be settling into a trading range for the time being. The weekly export inspections came in at 658,000 metric tons, which was above the high end of trade estimates, as well as being a high for the marketing year. After the close, the crop progress report indicated that spring wheat is 77% harvested. That's well ahead of the 5-year average of 55% on this date. Cotton futures continue to inch higher. At the close, we had December futures up 26 points, settling at 93.36. The cotton crop is now rated at 71% good to excellent. That's a 4% improvement over the previous week. 97% of the cotton crop is squaring, with 79% setting bolls and 14% having the bolls opening. Livestock futures were mixed. At the close, we had October live cattle $2.90 higher, while September feeder cattle were up $1.80 at the closing bell. Lean hog futures gave up some ground, with the October futures down $1.15 for the day. The August cattle on feed report had cattle on feed at 98.1% versus the 98.2% that the trade was looking for. Placements came in at 91.9%. That was less than the 93.1% that the trade had estimated. And cattle marketings were at 95.5% versus the trade estimate coming into the report at 96.7%. Class 3 milk futures started the week with a strong performance. At the close, we had September futures up 40 points, settling at 17.45. And meat cutout values were mixed. Choice box beef continued to move higher. They ended the day up $2.97, closing at $3.48.03. Select boxes were 87 cents higher, settling at $3.19.40. Well, pork carcass cutout values came under actually a great deal of pressure. They closed down $6, settling at $113.26 per hundredweight. This has been Craig Howgard with your Financial Issues Ag Update. We'll be right back with more financial issues after this.